So with Iran going on, with the rates shifting, the affordable housing crisis going on, it's never been more important to be surrounded by the pros. Surround yourself by people who stay on the cutting edge. Because in my opinion, as a one-man or one-woman band with no one surrounding you, it's impossible to keep up. All right. Oh yeah, we're digging in. So market update. And this is one thing I'm going to be getting your vote on, by the way, because I geek out on this stuff and I can talk about the market update, but I feel like having in front of me notes from it and giving it to you straight from my notes sometimes makes sure I hits the points better. So we're going to find out from you how you feel about that. So keep the chats hopping, and I appreciate it. So in the last, 4 days, a couple of massive things have happened. Many massive things has happened. But the first one, the U.S. attacked Iran and went to war with Iran. Oil prices had some increase going on. Mortgage rates that were at 3-year lows, actually almost 4-year lows, started to tick back up slightly. Secondly, the FinCEN, the Financial Crimes Enforcement Network, it just dropped new rules, and you can make sure you want to get that right. So we're going to talk about that and how to handle that. So if you're doing creative financing or owner finance deals or the boss flow strategies, what I'm about to tell you will be the difference between building a real estate empire or getting knocked out and not staying in the game. So get ready to take lots of notes. So number one, February 24th, just a few days ago, mortgage rates hit 5.76%, which is the lowest rate we've seen since September of 2022. Refinance applications, you heard me talk about it on the Deal Room, more than doubled year over year. Buyers were flooding back into the market, and a lot of positive reports were coming out. Now, I'm still very bullish on the real estate market, and especially in the Midwest. I've been preaching Midwest gold rush at you guys for years now. So over the weekend of March 1st, United States and Israel launched one of the largest military operations in modern history. And Monday morning, because of that, after killing Iran's supreme leader and taking out top military commanders of Iran's, Monday morning oil prices jumped, 9%, I think? And mortgage rates went from 5.75% to 5.91% in just 2 days. And I want to point out, I'm going to talk to you about FinCEN. The FinCEN announced new reporting requirements for real estate back in 2023. And here we are, March. We're now in March 2026, and we're in full enforcement period. And here's what most people don't understand. If you're doing creative financing and you don't comply with these rules, you're not only facing fines, but according to the rules that are written out, you could be looking at federal money laundering charges. So not something you want to mess with, which beefs up my case of why you should always close with real estate attorneys. So with Iran going on, with the rates shifting, with as they call it, the affordable housing crisis going on, and with compliance happening at new levels, needing to happen at new levels, it's never been more important to be surrounded by the pros. And that's the first. If there's one takeaway you get from the entire Deal Room today, yes, we're going to get to live dials. Yes, we're going to go through this entire update. But it would be exactly that. Surround yourself by people who stay on the cutting edge. Because in my opinion, as a one-man or one-woman band with no one surrounding you, it's impossible to keep up. And that's why I geek out on this stuff every single week and surround myself by incredible counsel. Actually talked to 2 attorneys this morning and was reviewing a message from a 3rd attorney going through all of this because I want to make sure I'm bringing you what's up to speed. And, of course, the disclosure to keep all my attorneys happy. I'm not an attorney, don't claim to be. So do your research and hire the pros to do what they do best. Here's the first thing you need to know. The BOI reporting, the Beneficial Ownership Information Reporting, started happening last year, which, by the way, my feedback on that is if you're not familiar with it, make sure that you are hooked up with one of these crews like PCS, Prime Corporate Services, or KKOS. I like to use these guys because they file things for you and they help keep you on track for a nominal, tiny amount of money. And so they keep you in effect on reporting what you have to report. So there's exemptions, several exemptions they'll walk you through. When it comes, though, to the reporting rules, the FinCEN Act, I want to point out that All has to be reported within 30 days of closing. All cash transactions, all cash purchases of residential real estate, and all purchases made through LLCs or shell companies, and all transactions involving a transferee who is a legal entity. What's a transferee? That's the buyer. So if you're selling a property to an LLC, even if it's financed, the transaction might still need to be reported. And the reporting rules say that the full names and addresses of all parties, the property address, the purchase price, how it was paid, cash finance, seller finance, private money, etc. If an LLC is involved, the beneficial owners, if the buyer is foreign, if it's part of a series related to other transactions, so much more. This is so important, guys, and I'm pointing this out. And again, I don't expect you to get all of this. I've been geeking out on this for weeks, and I still ain't got it all. The Reporting Act is a big one, and it's a big change. What you need to know is this. Things might take a little longer to close. May have to have a little more patience with your attorneys or your closing title companies, and it's never been more important than right now to always close with title companies and real estate attorneys. That way they make sure you're protected. So let's talk about how it's specifically affects the BOSLO, buy, own, under finance, and sell on lease option. A typical BOSLO structure, for those of you guys who have been hanging out here, know that we buy, own, or finance. We buy, the seller finances us, the seller holds the note. We either pay them directly, or if there's a debt, we pay the underlying debt. And then on the sell side, we lease option the property to a tenant buyer with an option to purchase. They pay an option fee up front. Type it in the chat, NROD, non-refundable option deposit. They pay a non-refundable option deposit up front, monthly rent every single month, which, by the way, we just got to collect another beautiful NROD. Shout out to our incredible team on one of our Indiana properties. We collect a non-refundable option deposit up front, monthly rent every single month, and then when the tenant cashes us out and buys the house, then we collect a back-end payday. So when you're buying on owner financing, through an LLC, which if you're newer, you should be buying through an LLC, unless you're using trust, another seminar for another time. That's a reportable transaction. You need to report beneficial ownership of your LLC. The seller might need to report the transaction if it meets certain criteria. The financing structure needs to be documented. And again, I don't expect you to have 4 pages of notes and close this yourself. I expect you to have a page of notes and make sure you're closing with real estate attorneys and that they are the ones who are responsible for making sure that you get them what they need. But I share this because, especially for those of you who have already done some deals, those of you who are brand new, you're going to find, well, gosh, this is just the way it works now. But for those of you who are experienced, you've already done deals, and then you, out of the blue, have your real estate attorney hitting you up or your title company hitting you up for information. You're going, where the heck did this come in? There's a lot of new rules that come into play. So know that they're going to be asking for more documents. I know it sounds like a lot, and it feels like the government is treating you like a criminal when you are just trying to build your wealth. But here's the reality. The penalties for non-compliance of the FinCEN Act are severe. And ignorance is not a defense. The good news is, if you follow the rules and you always close with the real estate attorneys, then that's your best shot at making sure you do everything right. Because everything's documented, everything's transparent, and if anyone ever questions your deals, you show them exactly what you did and why and how it was legal. Okay? Very important. Recap of that segment. FinCEN is now in full effect. Don't let that scare you. Just make sure you're intentional and you do things right. All right. Now, the Iran situation. Let's talk about what's going on in Iran and exactly what's happening there. We have, as you hear me say often, a real estate investor, a real estate developer who is president. And he's very pro-business. He is very pro-growth, very pro-real estate. So you can pretty well bet that with Republicans controlling the House and the Senate and backing, for most part, the president, and the president being a real estate developer, real estate investor, that a lot of the rules that are going to continue to come down and a lot of the pushes are going to be very pro-real estate investors. You've heard me talk about in recent weeks the fact that he's very intentional to keep housing prices at a level that doesn't cause the people who are sitting on equity and maybe they're counting on that for retirement to suddenly lose out on a bunch of equity. So what do we have to do? We have to make wages increase to catch up. There is inflation. We'll talk more about that another day. So oil prices and go up. Inflation fears went up. Treasury yields went up. Mortgage rates went up. Oil went from $67 to $80 a barrel in just one day. And so I point this out because the Fed was very close to cutting interest rates. They were talking in June and September. And while that's a good perspective, this could shift that. And my belief is with the new, the name just escaped me, with the new Fed chair coming in, Jerome Powell will be out in May. And I believe that we will still be looking at rate cuts. I think there's going to be a lot of hype, though, between now and May. And we may or may not probably won't see any rate cuts until after Powell is out. And I share this because, again, expect the rates to be a little bit fluctuating. But what does that do for us? We are BOFSLOW specialists. We buy, owner, finance, sell, lease options. So we're not worried about that in the least bit. When it comes to the spring is causing houses to sell. And I want to point this out. Stephanie, if we could pull up that news article, I want to show you guys this real quick. This is a big one. The top, let me see, is that the right one? Yeah, scroll down a little further. Yes, that is the right one. Thank you. A little more. So right here, I want you guys to see this because when it comes to the markets, I've been yelling at you guys for the last 2 years, the Midwest Gold Rush. Get in the Midwest. Get in the Midwest. It's a market you want to be in. We've talked about Louisville, Kentucky, and Elizabethtown, Kentucky, and Evansville, Indiana, and Kansas City, Missouri, and all of these areas, and proof being rates, as regardless of what's been happening with rates, the West Coast and the Sun Belt have been experiencing some price correction a little bit. The Midwest markets continue to rise. And the Midwest has solidified its position, the news article on your screen says, as the nation's strongest region, boasting an average year-over-year price growth of 3.56%. The Midwest benefits from having current affordability advantage in many areas. Even as home prices rise in the Midwest, they remain lower than other parts of the country. And in the environment of high mortgage rates, the value proposition in the Midwest remains very attractive to buyers who have been priced out of the West and the South. So this is why you've been hearing me talk about it. We still buy houses in Indiana and Kentucky and all around that area. Several of our people work in Ohio and others in that vicinity, getting houses for $100,000, $200,000, $300,000 very commonly. So I point this out because, again, the Midwest Gold Rush is real. So even with spring coming and the house being the housing market still being massively underbuilt, big shortage on building houses. This is an exciting time to be getting involved. I still believe with all of my heart we are in an exciting window of opportunity. So what's happening? Remember the ban on Wall Street buyers buying the homes. So that's pushed some of the bigger buyers, relatively small number in comparison to the market, from continuing to buy up the houses. And so while I don't think that means necessarily bulk fire sales going on, because to the best of my knowledge, that doesn't even have in the executive order a determination of people being required to sell, at least not yet. I think that it's going to be very exciting for those of us who are buying a few dozen houses a year or a handful of houses a year to be able to get an entry point in the marketplace. So the window of opportunity just got a little wider, in my opinion. And I am excited. I'm excited for you guys because we are in exciting times. So you can stop sharing the news article. Thank you so much, Stephanie. So for every one of you on here is my word of advice. Get on the phones, have conversations, make sure you've built out your vision. What do you want to use 2026 for? Because January 2027 will be here very shortly. And you will either be looking back saying, thank you, God, I used 2026 to build to my freedom number, or you will be looking back going, crap, I wish I would have used 2026 to build my freedom number. And so make sure that you are taking consistent winning action.